Question number 2, Joanne Hayes.
Kia ora, Mr Speaker. My question is to the Minister of Finance. What progress has been made towards meeting the Treasury's budget forecasts for job growth in the economy over recent years?
Honourable Stephen Joyce.
Mr Speaker, on behalf of the Minister of Finance, I'm very pleased to report that there's excellent progress being made towards meeting the Treasury's forecast for job growth. Members will recall that in Budget 2010, the Treasury forecast that 174,000 new jobs would be created across the economy over the 4 years to June 2014. As it happened, 170,000 new jobs were created over that period, so we were very close to achieving what was then seen as a very ambitious forecast. But the news gets better, Mr Speaker. In Budget 2011, the Treasury forecast 171,000 new jobs would be created in the 4 years to June 2015. So far, with almost a year to run, 159,000 new jobs have been created since Budget 2011. So we have around 12,000 jobs to go, and that's very good in terms of what we need to achieve for the forecast by June of next year.
Supplementary, Mr Speaker.
Supplementary question, Joanne Hayes.
How is the growing economy, combined with continued high levels of business and consumer confidence, influencing the outlook for employment and investment?
Honourable Stephen Joyce.
Mr Speaker, on behalf of the Minister of Finance, the growing economy is supporting employment and investment. For example, the unemployment rate fell to 5.4% in September. That compares with 6.2% in Australia. There were 18,000 more people employed in the September quarter alone, and the labour force participation rate increased by 0.1% to 69%, which continues to be one of the highest in the developed world. Statistics New Zealand has noted that rising employment is more than keeping up with strongly growing population and inwards migration. While business and consumer confidence have come off their record highs, they do remain at elevated levels. This indicates strong employment intentions. For example, the NZIER quarterly survey of business opinion reported that a net 18% of firms expect to increase staff numbers in the coming quarter.
Supplementary, Mr Speaker.
Supplementary question, Joanne Hayes.
How are positive employment indicators being reflected in average wages, and how do the latest average wage increases compare to movements in the cost of living?
Honourable Stephen Joyce.
Mr Speaker, on behalf of the Minister of Finance, cost of living increases are actually very low. Consumer price inflation was just 1% in the year to September, and that's helping to keep interest rates lower for longer. Food prices actually fell by 0.1% in the year to September, with fruit and vegetable prices falling 3.3%. By comparison, average hourly wages rose 2.3% in the past year, and average weekly wages rose 1.8%. Therefore, I think actually people's wages and cost of living do matter. I think it's interesting that the opposition don't think it matters, Mr Speaker, but actually I think it does matter to New Zealanders, and probably matters a lot more than dirty politics and blogs and all the sort of rubbish the Labor Party focuses on.
Supplementary, Mr Speaker.
Supplementary question, Joanne Hayes.
What other indicators confirm the economy is heading in the right direction and will continue supporting new jobs and higher incomes into the future?
Honourable Stephen Joyce.
Mr Speaker, on behalf of the Minister of Finance, apart from low inflation, low interest rates and real wage growth, there are a number of other positive indicators. For example, the economy grew by 3.9% in the 12 months to June, which is one of the fastest growing developed economies in the world. And New Zealand's households have now posted positive saving rates for 5 consecutive years. Just this week, the Institute of Economic Research said that while one-off boosts to the economy are fading, there is a durable underlying recovery taking place that isn't built on borrowing. It's in stark contrast to the situation the government inherited in 2008. Back then, the economy was mired in a recession before the GFC. Inflation was more than 5%. Floating home mortgage rates, you may remember, were nearly 11%, and we faced a decade of fiscal deficits.
Supplementary question, Dr David Clark.
To the Minister, does he believe the Minister of Economic Development's target of reducing unemployment to 4% by 2025 is ambitious, given it falls 14 years after the Canterbury earthquake and 14 years after the end of the global financial crisis? Or does he think we can perhaps get there just a little faster?
Honourable Stephen Joyce.
Well, Mr. Speaker, on behalf of the Minister of Finance, the member is incorrect, and I think he was told about this in the last session. It's not the Minister of Economic Development's target, and also, by the way, it's not even an MB target. The MB target is to maintain employment as much as possible, maintain unemployment below 4%, and it's not specifically attached to 2025.
That's right.
Point of order, Dr. David Clark.
I seek leave to table a document signed by the Minister just a few weeks ago that acknowledges this target.
Source of the document.
It's the statement of intent from MB signed by the Minister.
Order, that is a document that's freely available to all members.
Clearly not read by the Minister.
Order. Question number 3.